Welcome to the Jill on Money Show. It's Tuesday, August 6th, and here we are. It feels like old times, gang. Another big breaking news stock sell-off. I always know that the market is not doing well when my phone lights up. Let me see what time they actually called this morning. Let me see, 2:36. How about that, Mark? 2:36 a.m. for the first time they called me. I didn't see it. I was sleeping. But anyway, there was a big sell-off overnight. And we woke up to this idea that the stock market was, just tumbling down, following up on Friday's sell-off from the jobs report. That's why we did this on Monday. When we were talking to you on Monday, I said, I better do another time where we're just talking about the stock market and give you some reference. So over the weekend, a few things happened. We had a terrible opening. And things got a little bit better after the opening. And so that was good. But let's kind of figure out what is going on. So the first thing we're going to do is we're going to play you the segment that we did yesterday morning. It was before the stock market had opened. So it's, about 20 after 7 Eastern time. And Vladimir Duthiers is the anchor. And we just did a kind of quick hit about what was happening. And on the other side of it, I'm going to talk more about what you should be thinking about and whether or not you need to take any action. So here's my hit from CBS Mornings. The anchor is Vladimir Duthiers.
All right, so let's talk about these sharp downturns in international market. Really, really large downturns. What do you make of it?
Well, last week we got some disappointing data about the U.S. economy. So we found out that the jobs that were created were fewer than expected, and the unemployment rate actually went up to 4.3%. We've seen 4 consecutive months where the unemployment rate is creeping up. And you put that together with the earnings reports from Starbucks and McDonald's, and all of a sudden we started to worry that maybe consumers are under pressure, the job market isn't as strong. Then we get this generalized fear that the economy is slowing down, maybe headed into a recession. That caused stocks to sell off last week in the U.S. We saw the selling continue globally overnight. And this morning we are looking at a potential another down day on Wall Street.
So for investors who are looking at the market, and Jill, we talk about this a lot, people try to time the market. What should they be doing in response to what we're seeing?
If you are a long-term investor, take a deep breath. It is very scary. I get it. But if you're investing for decades in the future, even if you're 60 years old, you're investing for decades in the future, you stay still, you do nothing. You try to maintain your game plan. If you need cash within the next 6 to 12 months, then that money never should have been at risk. Hurry up, go sell it, put it in someplace safe. But as long as you're in a long-term investment portfolio, you shouldn't worry. One other thing you should be happy about, we've talked so long about how interest rates are high, they're coming down. Interest rates tend to come down as economies slow. So we'll see this morning. Mortgage rates, they're lower right now than they've been for all of 2024, Vlad.
Okay, so a couple of things I didn't get to in that actual segment. And one that's really interesting, that is that over the weekend, none other than Warren Buffett disclosed that Berkshire Hathaway had sold half of its position in Apple stock. That's pretty amazing. We also know that, the Japanese stock market, we talked about how it fell, is down by 12%. But I wanted to give a little context for kind of the kind of action that we've just seen. So, Mark, I'll bring you on the air with me to talk about this, but I just want to say that there's something in the parlance of traders where what they essentially do, big institutions, is that they'll borrow money for cheap rates and then invest it in risky stuff. And for the past few years, we've seen that. They've said, a lot of investors have said, I'm going to buy these big U.S. mega cap companies and I'll borrow money from the Japanese government because the borrowing rates are really low. And then what happened was the Japanese central bank, the Bank of Japan, actually raised interest rates there. And that sort of started a little bit of selling off in the Japanese market. This trade where you borrow cheap and invest is known as the carry trade. And what is really important is as the Bank of Japan raises interest rates, it causes the yen to go up. And in fact, over the last week, the yen versus the dollar has gone up by like 7.5%. So that means that many of the big investors out there said, one side of my trade's getting hammered. I better get out of the other side. So now let's put this all together. The carry trade is unwinding. Berkshire Hathaway is unloading Apple stock. People are worried that there's going to be a recession, that consumers are rolling over. And that explains the stock market sell-off, at least in the near term. Now, what's going to happen in the future? Mark, do you think that the bull market is over? Do you think that we are going into a bear market? Do you think that we're going into a recession? What's your thoughts?
I'm going to stick with what I've been saying for many months now. I don't think all hope is lost here. I mean, during times like these, you have to put things in perspective. As we speak, on Monday morning, the market for the year is still up, nearly 10% on the year. So just like take a deep breath. It doesn't always go up. There are moments like this. And I think I was reading something earlier, like at some point, basically during every single year, there's some sort of correction. This is just part of the deal.
That's exactly right. And if we have gapped down, right, we closed at one level, we dropped on the, we're still up on the year. That's so true. And listen, returns can go away poof like that. But I really want to remind you that if you go back to the spring of 2020, when we started doing daily broadcasts of this show, everybody thought the world was coming to an end because it really felt that way. The global economy was frozen and shut down and stocks were plummeting. And at that time, what did we say to you? We said, hold on, this is horrible. We have no idea where we're going next, but we come out of things. And if this is just a run-of-the-mill recession, if we do get a recession, we come to the other side of that. And you know what, Mark? I think the other hard thing for people to see is that if you're in the accumulation mode, if you're putting money into the market every week or 2 weeks in your retirement account, you're saving money for your kids' education, you should be rooting for times like this. This is actually what you want. You want stocks to go down so you can buy them at lower levels. That's really the key here. Oh, Mark, by the way, how about mortgage rates?
Trust me, I mean, I have a horse in this race. I am selfishly rooting for things to get a little bit worse before they get better because I want those rates to keep coming down. And I will say, just based on what you were just saying, I was on Twitter before. I was laughing so hard because I saw a tweet from Schwab, basically something along the lines like, we understand many of you can't access the site. We apologize for any inconvenience, which just tells you that people are just reacting to this. They're logging in, they're going nuts, they're selling, they're making trades, which is like the worst possible thing you could be doing.
Yeah. I mean, this is the thing that I always can almost like say that's par for the course. You see scary headlines, you feel like you want to sell. Now, if you're a day trader and you just want to lock in your gains, I get that. I mean, there is something to be said for if you, let's just say you owned a stock and it's up a lot and maybe down from its highs, but you say, okay, let me take my money off the table. Fine. Take your money off the table. But in your real investment account, the one that you're really looking at for like, I just want to make sure that like that's there for me down the line. Yeah. And by the way, again, even as we're speaking now, I want everyone to get off talking about points. 1,000 points in the Dow is no biggie anymore. It's less than a 3% move. But, if you're looking at the S&P 500, you're looking at the NASDAQ. Yeah, everything is down, but it's already come back mid-morning. And it doesn't mean it's not going to fall again this afternoon. Doesn't mean it's not going to fall tomorrow. It does mean you don't have to try to guess the next 2, 3, 4, 5% in the markets. You really don't. You know what the good news is, Mark? Besides mortgage rates, it does make us quite relevant. And so if you are freaking out, and I laugh a little because our show really came, we started this show back in 2016, okay? But on March 14th of 2020, right before the U.S. stock market made its bear market low of the pandemic, we started going to a daily podcast. And that is kind of how we started holding your hands. And since that time, you've heard people call in, you've heard people talk to us about things that they were doing. You've heard us counsel people like you've got too much money in one stock, even if it's a great stock. And you've also heard people very nonchalantly when the market's up, sort of take that like, oh yeah, I know, that's your thing. This is why. So what I'm here to tell you is Mark and I would be delighted to hold your hand through anything that you're feeling as long as you don't act. Try not to act. Go to Jill. Here's the one action you can take. Go to JillOnMoney.com, click the Contact Us button, please check the box if you'd like to come on the air with us live. It would be our pleasure to talk to you. And you can check out all the content that lives there, and you can check out all the things that we're doing. And in fact, Mark, it's funny. I feel like my headline for Friday when I was putting that blog post up was pretty prescient, wasn't it? I mean, I wrote it in the morning after the jobs report came out. And the first thing that came to my mind as I was thinking about this, I was like, I wonder if we're done. Maybe there's no soft landing. So anyway, I call you out to the blog section of our website, which has always been a fun way for me to process what I'm thinking. I have a few other things to tell you, Mark. As we look ahead, it is Tuesday. We're going to get a report out today that is the New York Fed's quarterly report on household debt and credit. I am going to look at that very carefully because I do want to see whether or not people are getting more into credit card debt, carrying more debt, and also whether they're paying late on that debt. Because, essentially, I think that what we're really considering right now is how are consumers doing? If they're not doing as well, then that may increase the odds for a recession or not. But it doesn't really matter to you. All right. Again, I just wrote the blog post, Bumpy Economic Ride Replaces a Soft Landing, because I knew it was going to be bumpy. I don't know where we do end up on this. I'm willing to consider anything as we look ahead. So please give us a holler if you need some help and some hand-holding. We are here for you. You can subscribe to us on the Odyssey app or wherever you find your favorite podcast. Please leave us a rating or a review wherever you listen. And of course, try to do something nice for someone else today. Change your work, change your wealth, change your life. Thank you for listening, and we'll talk to you tomorrow.